Hi, my name is John Zdanowski, and I'm the founder and CEO of Weekly Accounting. Weekly Accounting is a system designed to help you see your business better. I developed the system after working with startups for 25 years. I actually don't have a CPA, never studied accounting, but I've been a public company CFO. And as a CFO, 5 out of 5 of my full-time jobs, I took companies from single digits to 100 million in revenue. I'm going to show you some examples of those companies and what the system is and how it works. So when I was about 30 years old, we founded Affinity. We raised $60 million and acquired web hosting companies. We sold that to Hostway, and it became half of the largest web hosting companies in the US. After that, I went to House Values, an online real estate lead generation company. We grew that from 20 million to 100 million, and I took it public as the CFO in 2004. From there, I went to Second Life, and I ran the world's largest virtual economy. In every single case here, I went to companies with big visions, and then I fixed their unit economics. After Second Life, I built a portfolio of companies, out of which I've had 17 exits. So this method, this weekly accounting method to help you see your business better, is what I've used to select the companies that I've worked for and to help them get better. After Second Life, I became the CFO of General Assembly, an education company that teaches courses in technology, business, and design. We sold this one to Adecco for over $400 million. With one of the founders here, I started Assemble Brands. So Assemble Brands is a $100 million fund that lends money against the inventory of emerging consumer brands. When you click here, you connect your QuickBooks, your Shopify, your Google Analytics, and we build an integrated financial model to underwrite the business. I left my full-time responsibilities here because I knew I could rebuild this so that it could help every business see their business better. So the system does what you expect a great CFO to do. It illuminates the contribution engine, it analyzes the trends in your unit economics, and that helps you forecast profitability and cash flow. The reason this works, and what's different from a traditional CPA, is as traditional financial people are using an old map. The income statement and the balance sheet and the cash flow statement, that 3-statement model was invented originally as it is today in 1494. So for 500 years, all accountants have done is make more rules. And their intention is to help you keep you compliant with tax and GAAP. So I say a CPA is a license to do your books in a way that doesn't help the business. The second thing is they limit themselves to just the financial data. We ingest the data from every business application and then build a weekly data warehouse and then build what I call the fourth statement, or the statement of economic quality, that focuses you on your unit economics. So the easiest way to see this, and it works for every business, the easiest way to see it is to see it for direct-to-consumer companies. Every business has an audience. They try to convert that audience into new and repeat customers. From that, I can determine your unit economics. I do that marginally and cumulatively. I'll show you an example of that in a second. Then we look at a cash-based P&L so that we can then start to look at it weekly. And once you see your business weekly, the old ways of seeing your business will seem quaint. Just as an example, here's the direct-to-consumer business that happens. So you can see this company spent $15,000. So the average spend in this quarter was $16,000. The average order value has stayed relatively constant. And here's a cash-based income statement that shows average weekly for the last 6 quarters. The way we look at unit economics, when people say unit economics, they usually say a lifetime value. That's an ambiguous word, so I say meaningless statistics are up 2.3% today. I use lifetime gross profit. And the real thing that we've done here is we're making a standard in FP&A. Once you have this, I can ingest data from every business application, and we do it as a gift. So if you want to try this out, you go to weeklyaccounting.com and select get your free gift. And then you connect your QuickBooks and we'll build you an integrated financial model. And I'll sit with you and talk with you about the quality of your data. The system looks like this. You use your Google account to come in and connect. And then that takes you into the platform. These are all the companies that are on the platform, and I can go into any one of the companies. I can see what I'm connected to. We can connect to any system. And right now we have buttons for these. And then these are the tasks. And this, I can just click this. This goes out, gets the data from every business application, and then updates the integrated financial model. I look at cumulative unit economics because then I can compare companies across industries. So here is a professional services firm, and here's a direct-to-consumer firm. I'm going to read this sentence to you so you can understand what I mean by cumulative unit economics. In the history of this company, it spent 1.4 million acquiring 2,400 customers. Inarguably, their customer acquisition cost is $612. It fluctuates on a marginal basis quite a bit, but on a cumulative basis, I've turned it into a balance sheet metric, so it doesn't fluctuate as much. Those 2,400 customers have purchased 6.7 times. Now I use cumulative revenue and cumulative gross profit to get to a cumulative gross margin of 45%. With an average order value of $1,000, I just take 1,000 times 6.7 times 45%, and I get lifetime gross profit for this company for all of its customers ever is $3,000. So then its lifetime gross profit to CAC is 4.8. In this case, their margins aren't this high, so their return on lifetime gross profit to CAC is just not as high as this. Here's an example of the same sentence, of the same view of a direct-to-consumer business. It spent 5.4 million acquiring 40,000 customers that have purchased 67,000 times. So its lifetime gross profit to CAC ratio is 1.3. For this company, when I did this back in February, I said, that's not good enough. You need this to be in the range of 2 to 2.5 in order for you to drive to profitability. We use cumulative unit economics, and then we show it against your marginal unit economics because this forms a baseline. Really high signal to noise ratio here. Remember, I'm an electrical engineer and have a master's in electrical engineering and worked on sonar systems. So I'm focused on signal to noise ratio and sampling frequency. And that's why the business is called weekly accounting. We can private label this for any company. So another one of our companies is Phoenix Strategy Group, and it has the same platform private labeled. So we can put basically, the weekly accounting gift button on your site. And then we can do this evaluation. We do this as a gift because we're trying to see if the people we're showing it to actually understand what we're talking about. It's like trying to explain balance sheets to people in 1494 when they were invented. It's hard enough to explain balance sheets to people today. And now we're introducing the fourth statement, the statement of economic quality. And it works, and it's worked for me for 25 years because when you put the right data in front of an empowered team, they get better. And that's how it works. And just as an example, again, when we're implementing this in an organization, we don't have to do the bookkeeping, but largely we can displace the bookkeeper because sadly most bookkeepers suck. So we restructure the chart of accounts. We clean up inconsistent bookkeeping. We build the weekly data warehouse. We build the integrated financial model. Then we build Monday morning metrics. Again, once you see your business weekly, the old ways of seeing your business will seem quaint. Then we do monthly close. Once you have quality data, GAAP and tax and any view of the business is just an overlay to quality data. So we can make any view of the business. Here we're showing a budgets to actuals for every single assumption that you have in the business. Inevitably, this is the process. It's like you're troubled. You're doing a monthly close with a CPA and you won't know the revenue until the books are closed. Functional is when I start showing weekly metrics to people, then they say, where did you get that data? That's not right. Inevitably, there's some confusion between what a salesperson calls a sale and what I call a sale, which is when I get a deposit. So then we're trying to find the language that matches between that describes the math perfectly. When words and math combine to predict things, we call it science. So really, the statement of economic quality is the science of forecasting based on unit economics. Soon we get to integrated. That's when you know where to focus your attention. This is an example of a company that provides Medicaid teletherapy, and it was doing weekly metrics before we got there. All of this is negative gross margin. We worked for 12 weeks to get the data right and get the team's understanding of it correct. Then, when we put the right data in front of an empowered team, things got better. All of this is based on what's called S-curves. So S curves exist in every business. And this is where the limiter of growth is. So for example, this company has spent $300,000 in a month to acquire 1,600 customers, and it spent $350,000 to acquire 1,600 customers. So by doing the math this way, we see where we are on the S curve, and we can say, hey, maybe you shouldn't spend more than $200,000 because you can't do it efficiently. When you're spending up here, I say it's like trying to make a car go faster by spitting gas out the muffler. So that's what we'll talk about. This is the same system that underlies assembled brands, and this is how we underwrite companies. This system can be private labeled for you to use for your own business or for a portfolio of companies like we have at Assembled Brands, or to underwrite companies like we do at Assembled Brands. So I'd love to share it with you and show you more about it. The easiest way to understand it, though, is to just go to Weekly Accounting and get your free gift, connect your QuickBooks, and then we'll set up an initial business review. And I'll be able to start to understand the complexity of your business, and we can put together a proposal for how we might work together to help you achieve your business goals. Thanks for listening.